Okay, welcome everyone. My name is Steve Torso. I'm the founder and managing director of Wholesale Investor. I'd like to welcome everyone to our Emergence Headstart online investor showcase. Now, obviously today we've got a big session lined up across the next couple of hours for you. So the first thing I'll kick off with is why the why behind Emergence Headstart. Now, obviously the biggest conference that we host each year is Emergence, and every single year we kick it off. We have anywhere up to 100 different companies featured, and we'll have anywhere up to 1,000 in-person attendees. And then last year we had over 5,000 sort of watch on the live stream. This year, what we want to do is we want to showcase some of the companies that are participating in Emergence early, because effectively what we want to do is bring awareness to some of the opportunities that are going to be participating, so that not only can you engage with them leading up to the actual conference, but then obviously meet them in person over the next couple of months. So for us, we're super excited to be able to bring this to you. We can't believe that it's November 30th and we're almost in December. It's like 2022 feels like one of those strange years where it feels like it's gone quickly, but it feels like it's been almost 5 years combined into one. So today, as a bit of summary, we're going to be showcasing 20 plus opportunities, both of early stage companies and also some exciting fund managers that we're showcasing as part of today. The opportunities are going to be featured from a range of different sectors. Now, there is one difference to the way we're doing today. It is live, so expect the unexpected. It will be fun. We're obviously doing a lot of logistical coordination behind the scenes and in the lead up to the event, to make it as seamless as possible. But given it is live, do expect some glitches, do expect some sort of changeover timeframes and so forth. What I suggest in the meantime is grab yourself a coffee and get ready. Basically what I'm going to do, just to start off, I'm just going to give you a quick demonstration of how to use. So obviously we've invited you all into our Crisp software to actually view the stream. Now, as part of that, what I'm going to be doing is going to be showing you how to actually get the most out of the software that during the actual event. So let me just take you quickly to it. So this is the main page which you've actually been invited to. Now, on the main stage of the actual event, you'll see I've actually paused my screen for the moment. Now, there is an agenda down here, but I'll get to that in a second. All the companies that are featured are actually sitting inside the exhibitor hall, right? So for example, as a different company presents, what you can actually do, now this screen, I paused it for the moment, but it will continue playing. So you can keep on listening to the presentation whilst you're having a look at the company's deal room. As I said, it's perfectly integrated. So in this example, I'm looking at MyoPharm. Now, if you want to get access to the information, all you need to do is request access. Likewise, if you really like the presentation, then give them a 5-star, as part of a review for that. And then also, once again, to request access, you can do that. And then once again, when you request access to the actual company, following that, you'll then be able to message from the side. So effectively, after you request access, as an example, I'll just request access right now. And then following doing that, I said the company will let you in, and then you'll be able to chat directly with the CEO who's actually on the presentation today. And likewise, you can follow up to have a look at some more information for it. Now, the other part as well is, given that there's only 5 minutes for presentations, there's obviously going to be a high level overview. So the other thing that you can actually do is you can favorite some of the companies, right? Because you may think, I really like that presentation. I'm going to come and review the information later. We're going to be keeping this page up for another week, sort of post the event. So once again, if you really like Perennial Partners presentation as an example, give it a love heart. It will show up in your favorites. So when you come and visit it later on, you'll be able to actually see some of this information. Now, that's really important. Now, the agenda for the event is all down here. We're going to be doing our best to keep time. As you can see, we're 1 minute over. So I'm going to be finishing up really shortly. But the full agenda of every company that's presenting is down here. Post the event, we're going to upload this and we're going to keep this in timeline with the actual agenda as well. Now, also following the event, just know there is that ability where you can actually network with each other following this. So I'll just change this. Now, there's all sorts of filters and so forth in here. But so you can network with all the different companies that are actually presenting, all the different exhibitors, etc. That's all featured here for you as an investor. And it's really important that you do that. So not only, as I said, you can connect with me, connect with Gareth, who's going to be presenting, every single person you can present and connect with. Okay, so that's the introduction to Emergence Headstart. I'm going to stop my share for the moment. I said you all would have received a link in your inbox, right, to actually come into the actual room And likewise, you would have received a link in a text message as well to actually view the presentations whilst we're actually going through the event. So on that note, I'm going to hand over to the next presenting company. I hope you enjoy the Emergence Online Investor Showcase experience. My name is Steve Torso. I'll be coming back at the end to do a presentation around some of the innovation trends that we're observing at the moment. That's going to be obviously that we think is impactful for your future investments going forward.
Thank you, Steve. Just to quickly introduce myself, I am Rhythm. So as Wholesale Investors Media Anchor today, I'm going to be your host for this event. So for our first presentation, I would like to invite Jed Durden, co-founder at Circular Energy Group. Jed, are you able to turn on your camera and unmute yourself?
Rhythm, that same issue's just popped up for me, the sharing ability.
Oh, got you. Jeremy, are you there?
Yeah, I'm on. So sorry, Jed, you're unable to share your screen?
Yeah.
What happened? I don't see where. Do you want to try again, Jed?
Yeah, it's still doing it, unfortunately.
Jed, are you able to forward your presentation slides to any one of us? If you or to Jackie's, like either send it to me and I can just quickly share it with Jeremy. Oh, actually, I have it already. Jeremy, can you check the folder?
Mm-hmm.
I guess you might have it. No, actually, we don't. Sorry.
To try to get the. Do you want to try to get the next person on while we sort this out?
Yeah, of course. Okay, so I will move on to the next presenter, which is Suki Zhu, founder at Umamia. Suki, are you on the call?
Yes, I am.
Perfect. Are you able to turn on your camera?
I cannot. It says I can't because the host has stopped it.
Okay, let's check into that. 1 second. Okay, I can see your screen, but I believe your camera is still turned off.
No, it still says the same. Oh, okay, got it.
Okay, perfect. Okay, all good. We can see you now. Can you just put your screen in presentation mode?
Yeah.
Okay, perfect. The floor is all yours. Thank you.
Amazing. Okay. Cool. Hi, everyone. I'm Suki. Here I would like to present our project Umamia. It's kitchen robotics with a decentralized supply chain to disrupt current hospitality. The biggest problem with current hospitality in Australia is the market gap. On one side, we pay the highest wage, but still lots of jobs can't be filled. On another side, it's a growing market full with potentials. The potential don't just lay with metropolis. 60% of Australians believes moving to a regional and working from home is their preferred future lifestyle. And because of current migration, regional Australia is getting wealthier. However, the current food offer in the regionals are not good enough for those picky eaters. So we create this solution to fit both metropolis and regionals. The goal is to provide consistent good quality food product with scalable business model to reduce workforce for hospitality business owners. Our business model starts with a decentralized supply chain. They are decentralized central kitchens with a centralized management system. By using this idle resource, we are able to build up a low-cost supply chain and bring local ingredients into our supply. Our partnered kitchens would process and package ingredients and deliver to our clients who subscribe our robotic machines to cook the dishes. We'll sell white labels, smart eatery solutions to current eateries, food courts, and bars and hotels on stage 1. Stage 2 will create and franchise eatery brand target to middle-class families, immigration investors, and hospitality groups. So far, we have built up a partnership with an overseas listed logistic company who is going to expand to Australia. We're looking forward to grow with them together. We visited all major robotic cook manufacturers from Asia and handpicked a few models to bring to our project. Our staff put ingredient packs that packaged from our partnered kitchens to these machine dispensers, press a button to select a dish. After 1.5 minutes, a quality and delicious dish comes out, as simple as that. Because it's smoke-free, it's perfect for places without exhaust fans like bars and offices. Our software connects the whole process from R&D to operation to point of sales, and the data backfeed R&D to recognize hero menu and product. The real benefit to our clients is labor reduction and profit increase. Also, their reliability to chefs is lowered down. We bring Asian fusion food to be our #1 end product. It's the most popular cuisine in Australia and fits in the future health trend. We obtain our clients with subscription model. Our client would pay $5,000 subscription fee monthly and subscribe our ingredients. The payoff period is only 4 months. We compete ourselves with local eateries and meal kits on food consistency, quality, workforce independency, and scalability. We are the winner of the game. Our team has great experience on AI and robotics, business operation, marketing, investment, food, and tech products. We also have a network of over 250 executive chefs and major suppliers. We aim to be cash positive from FY25 when we have 25 clients, and IPO on FY27 when we have 80 clients. Thanks for your time. We invite you to join us, take a bite of this first hospitality robotic dividends, and be ahead of the game. Thank you.
Thank you, Suki. That was a great presentation. For our next presenter today, I would like to invite Brendan James, founder and executive chairman at Line Hydrogen.
Thank you. I'll just put my
Perfect.
presentation up. All right,
Amazing.
Can you see that okay?
Yes, you just need to put it in full screen. Okay, all good. Thank you, Brendan.
Okay, thanks very much. Look, it's a very short presentation today to go through what is one of the leading and fastest developing green hydrogen companies in the Australian hydrogen space. This will actually be one of the last opportunities that sophisticated investors will have to invest in Line Hydrogen before we open it up to international investors in January in the lead up to our IPO. So quite relevant for today. First off, I think people have to understand, particularly people that live in the city, that Australia requires a delivered fuel source. We're a very large country, and we have quite a lot of reliance upon diesel for heavy industry and for transportation. Now, Line Hydrogen will commission Australia's first commercial scale green hydrogen operation in 2023 near Georgetown in northern Tasmania. We'll utilise our in-house design, engineering and construction capabilities to significantly reduce capital costs, and we aim to deliver the highest return on invested capital in the industry for shareholders. Line Hydrogen is Australia's only vertically integrated green hydrogen company with the combined ability to design, build, own and operate Australia's first commercial scale green hydrogen production operations, design, build, operate and sell a range of heavy haulage vehicles, reducing offtake risk and increasing returns, and rapidly roll out its optimised operating model across all Australian states. And I'll talk a little bit about the projects that we have in our books leading up. But the important thing here is vertical integration. If you want to roll out hydrogen in Australia, as a hydrogen player, you have to be vertically integrated. We received a $5.5 million grant from the federal government. It was in the federal budget. We were the only hydrogen company that was announced in the federal budget. And we had quite a lot of discussion in Parliament about what Lion Hydrogen's doing. And a couple of quotes there from Senator Helen Polly, that Lion Hydrogen is working to deliver Australia's first operational commercial scale green hydrogen facility, and that we will invest in green hydrogen production to co-locate with solar farms to replace diesel buses in Tasmania trucks, in Tasmanian trucks and buses. A quite significant project in Tasmania, which is sitting down with the ministers yesterday. They are fully on board with what we're doing, and as they are at the federal government. This was actually announced by Anthony Albanese himself. So our vision, we will deliver early market commercial scale green hydrogen for diesel replacement in Australia. And the important part here is it's at diesel parity pricing. The green premium is great, but the reality is for most businesses, they can't afford it. We have to be able to deliver hydrogen at diesel parity pricing, so there's no increase in cost. And in fact, what we're seeing now is that we will deliver that at below diesel parity, so we'll see a reduction in costs for heavy transport and heavy industry that's reliant upon diesel. So why are we focusing on Australia, I think is one of the other key points to come out of that. Well, Australia consumes about 84 million litres of diesel per day. We're a very high diesel importer, with over 90% of the diesel currently imported, or 25 billion litres of diesel imported in 2021. Now, our diesel imports have more than doubled since 2011. So at the moment, we're going in the wrong direction in terms of our carbon emissions. There are 5.3 million diesel vehicles on the road in 2021, and it accounts up for 20% of our greenhouse gases come from the transport sector. In terms of the appetite for hydrogen, we know that 90% of Australians already support using hydrogen as a fuel, according to a 2021 survey, and 75% of Australians believe that climate change is already happening. And I think after the last summers and winters that we've had, I think it would be fair to say that that is increasing. Green hydrogen production. Well, green hydrogen is produced from water electrolysis fueled by renewable electricity in Australia. And green hydrogen is carbon free. So when green hydrogen is either put through a fuel cell or put through a combustion engine, the only product from that is water. And it is a very small, uses a very small amount of water to produce a lot of energy. And for example, your average shower this morning, if you took the water that you had in your shower, that would drive your car 350 kilometres. So what drives us? Well, we aim to be the highest returning green hydrogen producer in Australia. Quite simple. We'll do that via vertical integration. Our core business is green hydrogen production through direct hydrogen sales and offtake agreements, and we've put offtake agreements in place already, and we'll announce some of those with some of the trucking companies in coming weeks. Now, to facilitate that and to get hydrogen rolling in Australia, we have obviously had to become vertically integrated. Now, that is through the end-use technology, hydrogen combustion engines, zero-emission hydrogen boilers, and the development of end case uses, which some would have seen if you reside in the Tasmanian area, and heavy vehicles. We are doing the retrofitting in-house. We have 2 trucks in our facility at the moment that are currently being retrofitted, and we can direct supply or subcontract. And then we are doing the distribution, refueling, and distributed to users, and we'll touch on that in just a second.
Brendan, I'm so sorry.
Is in Tasmania.
Brendan?
Yep.
I'm so sorry. We are on time. Can you give your closing statement, please?
It's too big a company to do in 5 minutes. But look, we're raising $4 million in the market. Please go and have a look at it on the CRISP website. We're raising $4 million through convertible notes. We will do it through either a convertible note or some other form. We're open to that. But we're doing the pre-IPO raising before going into the IPO early next year. So we invite Australian investors particularly to come on board before we open up to that international investors. Thanks very much.
Thank you, Brendan. And for all the attendees, please feel free to connect with the presenters using their CRISP deal room. I would now like to invite our next presenter, Jed Durden, co-founder at Circular Energy Group. Hi, Jed.
Hi, guys. Thank you very much.
Perfect. Can you share your screen, please? Okay, all good. We just need it in presentation mode.
Sure.
Slideshow.
Yeah, slideshow.
Yep. And play from start.
Perfect. All good. Thanks, Jed.
Beautiful. Thanks for joining me, everyone. Jed Durden, co-founder and CEO of Circular Energy Group, and we're in our Series A round, and we've raised 400K to date. The problem. This is Sue, our problem customer. Energy is a cost and a liability for Sue. Energy costs are on the rise. Businesses around Australia are feeling the pinch at the moment. The next contract she signs will be typically about 45% increases from the last time she signed her energy contract. At the same time, she's trying to navigate this space, and she's running into a prolific and overwhelming amount of competing solutions. Those solutions are all disconnected at this stage, and every single business that she knows of and herself are dealing with a different roadmap forward. At the same time, she's got increased pressure on sustainability action coming in from all stakeholders that interact with her business. And she needs to navigate between 700 different metrics across more than 60 categories, and there's a few on the page here. The bigger problem is once she chooses which way to go, how is she going to verify this? It's a complex and messy ecosystem, and it's not core business. And this is the same problem for thousands of organisations and governments all over the globe. So our disruptive solution that we've developed is a world-first 24/7 carbon-free energy standard, which we already have endorsement from the UN's 24/7 carbon-free energy movement. And we've developed a platform as well called CFE 247, which with some key features called as carbon-free energy 24/7 pillars and a carbon-free energy 24/7 carbon-free energy ESG framework, which ultimately is one system that we can use to pull together. So businesses can operate around the same standard, but so can governments, industry associations, and things like that. This slide really talks through the process. So energy is now, we aim to have energy become a sustainable asset and competitive advantage for Sue and any business. So yeah, our CFE 247 platform really drives the process, and it's a really customized, optimal, and clear pathway forward by allowing organisations to establish a plan under the criteria we've established, and then become certified, Sustainable Energy Commitment certified, and move towards 24/7 carbon-free energy, and use the ESG scoring system and 24/7 pillars to not only measure her own system, own company's performance, but also align with suppliers and industry bodies and state governments and things of the like. So she can also measure other key performance measures like financial, social, and environmental areas across the organisation through the platform. And it's one scalable system that can align governments, organisations all over the world. So we're Circular Energy Group, and our vision is a world where sustainable decentralised energy is accessible to all of us. A key stat, 60% of global emissions come from businesses' energy usage. The current target set by the federal government by 2030 is 43%. So if we put all our eggs into solving the business emission challenge, we'll be well ahead of that 43% target, and a huge opportunity for the organisation. We have a group of companies that are helping us execute on our vision. And we've been proudly operating in Australia for over 10 years. Here's a snapshot of really what this is all about, and this is one of our clients that is interacting with all of our businesses under Circular Energy Group.
Wholesale Engineering is a structural fabrication firm that specialises in heavy structural fabrication. We build bridge girders, ferries for the River Murray, mining equipment, and a bit of defence work as well. We've worked hard on our values and our core purpose recently. So we have our purpose, which I love, which is Together We Thrive. Our values are based around integrity, collaboration, courageousness, and my favourite, which is committed to our community. CFO, I'm always looking at our bottom line. Electricity is one of the highest cost factors that we had on our balance sheet and profit loss. I come across Maximum Energy and I was really impressed. It looked like an opportunity for us to not only save some money, but also work towards sustainability and environmental care for our business. Having Maximum Energy go through the sustainable energy commitment with us, and we could see that we could do 100% renewables by 2028. It was a win-win-win for us.
Hi, Jed. I'm sorry,
I'm Jed
we
Durden
are
from Maximum
on
Energy.
time.
We've been working.
Can you give your closing
for the
statements?
last 2 years on their sustainable energy.
Ultimately, that went a little longer than I had reasonably timed. So ultimately we're raising 3.7 in capital, 400k raised today. We want to complete our open work packages across a number of areas in the organisation, and we're looking for the right investment partners to work with. So we'd love to hear from anyone that's passionate about this space, and we're really trying to close this round out by December 18 this year. Thanks very much.
Thank you, Jed. That was a great presentation. Now, perfect. Thank you. Next up, we have Paul Muller, CEO of DataBench. Hi, Paul.
Hi, Rhythm. How are you? I'll just bring my...
Thank you.
Right, hi there. I'm Paul Muller, CEO of DataBench, and we're an award-winning Australian business. We were founded in 2018. We have offices in Sydney, Melbourne and Brisbane, and our focus is on the technology that's driving data privacy automation for Australia and New Zealand companies. So let's get into it. Let's get into the root of the problem. In a nutshell, data privacy compliance is really hard. It's hard for companies to understand how to comply with ever-changing regulations that are occurring locally, regionally, and globally. You know, in recent years, laws have been passed across 100+ countries, including the European Union, Australia, New Zealand, and now across various US states. The laws are continuously being amended and updated with tightened conditions, and overall businesses must comply. You know, there are new laws pending in countries like India and certainly across more of the US states. So if you're a business that's just trading in Australia, it's hard enough to just stay compliant across the Australian regulations, let alone if you've got customers that span multiple countries and jurisdictions. And, you know, in Australia now, we have federal and state level laws covering data privacy, anti-spam, and other sensitive data requirements. And in response to recent data breaches, our federal government here has just approved a new bill that will hand down title rulings and much heavier fines. In actual fact, the fines that have been announced as of yesterday may be the largest and the highest fines anywhere in the globe. And, you know, consumers, they have rights as well. In fact, consumers can make requests upon businesses to show them their personal data that they hold on them, with rights to change or delete that data or consent to move that data. And businesses need to comply accurately, timely and securely according to the regulations and the jurisdictions of that consumer. And some data can't be deleted for legal reasons. So how do you stay current? How do you stay compliant? And how do you pivot when the laws change? And if you are a global business, you just can't comply with, say, a GDPR for Europe on the hope that complying to that one regulation is good enough for all the jurisdictions that you deal with. So why DataBench? Well, let us take the hard work and stress out of your compliance. And at DataBench, we use smart technologies to firstly map where all the personal data resides across internal systems and external data systems. We can then secure that data from data breaches, and then we automate the life cycle of consumer requests from the authentication of the requester right through to finding all their personal data. We deduplicate it, we report it in a user-friendly professional manner that meets with legal compliance. And we comply to regulations with a full auditability, so you don't need to worry about all of the complexities. And we also let you self-assess, so at any time you know where your business fares to current and emerging regulations. We also take into consideration where data is outsourced to other parties like marketing businesses, or where businesses have multiple brands that they need to cater for. So what's our competitive advantage? Well, firstly, DataBench is the first to market in the ANZ region with full privacy discovery and compliance automation. We meet local and global regulations, both current and those that are emerging. Our solution is a SaaS technology. It's securely hosted here in Australia, which meets with data sovereignty requirements. And therefore, our licensing is an annuity-style revenue stream, which is complemented with local advisory services. We truly have no competition locally that spans the full paradigm of privacy discovery and compliance automation. We also have some patents filed with the International Patent Cooperation Treaty, and this will further extend our intellectual property, which will generate new revenue streams for us in the future. We are an experienced team of business, legal, and technology executives with a strong track record delivery. We respect our shareholders, both current and future, in all of our fiscal responsibilities for our short-term rapid growth and our long-term sustainability. From a competitor's point of view, we see competitors that have emerged across US and Europe, and they typically focus on a segment of compliance. They might be really good at generating consumer request tickets, but then they require huge manual human intervention. Or maybe these companies have been very good at focusing on data mapping, but ultimately the full automation of consumer requests across the whole paradigm is where DataBench truly comes as a first to market in complete privacy discovery and compliance automation.
Paul, sorry, we are on time. Closing statement, please.
Sure. We see a huge addressable market across Australia and New Zealand. And from our leadership team point of view, we span Sydney, Brisbane and Melbourne. We thank you for your interest in DataBench. We welcome you to reach out to us via CRISP for further details of our current IM and fundraise. We look forward to working with you on this amazing journey. Thank you.
Thank you, Paul. Lovely presentation. You can stop sharing your screen now. Perfect.
Thank you.
Thank you. For our next presentation, I would like to invite Ms. Tesha, founder and CEO at Learning Pod.
Hi.
Hi, Tesha.
Just
Perfect.
Can you see the screen?
It's coming. No, not yet. Okay, it's just coming up.
Awesome.
Perfect. You just need to put it in full screen. Okay, all good.
Awesome. Thank you, guys. I'm Tisha from the Learning Pod group, where investing in our children is what we do. I really want to actually just raise a very serious question to our investors first up, which is, what would it mean for you guys if you didn't have a generation for your future investments? So this is quite serious. And as we head into the two serious problems that we face, this is a question that I want you to have in the back of your mind. We have two serious problems. One, there is a lack of children playing and learning just the basic socialization, life skills, and they're just not meeting their milestones from a young age. So parents have limited, if not no, prompt professional advice, or just being given misleading information. So quite often we find parents having to Google or go to social media for support on how to raise their children on their developmental milestones. And this can sometimes have more of an effect than not doing anything at all. So our growing generation is lacking the ability of just tackling basic skills and social activities, which I know everyone has had this conversation. It is now showing a pressure in the greater workforce, which leads to our second serious problem, is that there's an overloaded workforce and including a lack of professionals, even skilled workers within our children's development, like teachers, therapists, and other basic professionals. This causes a delay in a child's requirement just for even basic advice, intervention, or even a diagnosis. Put simply, our current education and medical models is just not suited for our changed world. So what do we do? In summary, we offer a range of customised learning environments, assessments, content and delivery. So we support a child's developmental milestones while also providing support to professionals. I've got a few little snapshots on what some of our centres look like and our tree that represents all of our assessments where a child might be developing, achieving or emerging from that skill. And we're also NDIS approved. So we do this in two ways. We have our centres. These centres are specifically built to help with our children's physical wellness, emotional life skills, and just social skills. They're safe environment for families, corporates, and including schools. Basically, all our activities are designed to enhance a child's milestones and tracker development. Our second core part of our business is our technology. Capturing data, factual, reliable data from birth. This is to support our families with strategies tailored to their child and also assist professionals with true developmental history and data. So this should see a reduction of wait times to see a professional and also just a marketing wonderland. We've got families from birth, so right through parties, toys, presents, all sorts of supplies, we're able to capture additional transactions. Our team, we have got a massive team of around 40 staff who are all passionate about empowering children with skills for life. As one of the founders, I've got over 15 years of experience working with children in the schooling and the parent sector. And also this is our second rodeo. We've already had a proven successful exit after developing a software program that became one of the largest software programs within schools, which is now owned by a global company and also on the NASDAQ. So we kind of know, what we're doing and we're really excited to move forward. Also, we're profitable. We are turning over around $2 million a year and rapidly growing year in, year out of around 40% growth. We also have over 1,000 children that see us weekly. They come to our centres, they use our curriculum, equipment, or even to simply make a purchase. So we're well known and trusted by professionals, schools, government agencies, all for our reporting, our educational content and advice. So really, we're only looking to raise $800,000. Currently, we've already injected around $1 million to build its IT, its assessment, its content, our team and its centres. These funds will be going directly into our software development. We really want to fast track our application. So we predict that once it's all up and ready, it will turn over around $20 million within its first years. So we're pretty confident that we'll hit this. One, because we've already had a proven successful exit, and we've also got our previous CTO now on this project as well. So we're smashing targets and very confident in those figures. We'll also want to grow our team. At the moment, we have 40 team members and we need to grow it to meet demand and also increase our locations. So please come and be a part of our team. Follow us on CRISP, contact us directly, and we can talk to you a little bit more about how you can be a part of changing the world moving forward. Thanks, guys.
Amazing. Thank you for a lovely presentation, Disha.
No worries.
Amazing. You could stop sharing your screen. Okay, perfect. Next up, I would like to invite Theodore Stone, Director at Yup Home, for his presentation.
Thanks, Rhythm.
My pleasure.
I will try and share my screen now. Hopefully technology does not let me down. Give me 1 second. You can see my screen fine here, I'm hoping?
Yes, I can. Just put it in full screen. Okay,
great.
all good.
Everything all okay on your side?
All good. Thank you.
Thank you very much, Rhythm, and thank you to our wholesale investors. So firstly, I'm Theo. I'm an engineer by trade. I'm a property developer by profession, and currently I'm the Director of Business Development and part of the executive team at Yup Home. So who exactly is Yup Home? Yup Home is a PropTech company focused on revolutionizing the property industry, starting with the off-the-plan or brand new home segment. Every year in Australia only, there are over 500,000 residential property transactions. Further to that, there is over 200,000 brand new property sales every single year, rounding up about $150 billion industry in annual market capitalization. Yep Home has a dual or double engine system that powers its platform. On one hand, we have the SaaS platform to service our business or B-side clients. These are property developers and real estate agents. On the other hand, we have integrated a Web3 component to service the end customers purchasing our property, our C-side clients. For our B-side clients, we facilitate the environment and create the digital infrastructure for property developers, real estate agents, and end customers to interact seamlessly with one another, and we form the connections between these parties. On the C side, for our C clients, we're building a community around real estate and projects. Through building a community and the incorporation of blockchain and other Web3 technology, we will create transparency, which will ultimately create trust. These two engines combined together makes Yep Home a property supply chain solution company with a holistic B2B2C business model. So what exactly is a problem and why is this still a problem? The problems for each of our clients are both unique yet simple. The developer has a sales problem, mostly because they do not understand their customers' needs. The developer's mantra has always been, if you build it, they will come. The agents, however, require resources, properties, and customers to sell them to, and they need to provide their client with a better service in this new digital age. So what do the end customers need? The end customers ultimately need transparency and trust. If you ask anybody whether they trust a property developer or real estate agent, more often than not, the answer is no. But why? It doesn't have to be like that. If that's the case, why are these still problems in this day and age? There's two reasons mainly. The first one is that the digital infrastructure needs to be there first to solve this problem. 5G, unique tech solutions, and amalgamation of various technology to work symbiotically together. The second reason is timing. In a post-COVID world, this has accelerated digital adoption, which in turn has made more traditionally based industries and businesses more receptive to utilizing the power of technology, and it's changed the way people view and purchase things, and property is no different. So what exactly is the solution that Yep Home has? The amalgamation of big tech and Web3 will ultimately solve these problems for our clients, whilst at the same time exposing them to a brand new ecosystem built on Web3 technology. Our digital infrastructure, or the SaaS that we've created, helps developers sell more stock at volume and at speed by connecting them to the right agencies or connecting them directly to the customers. With the power of artificial intelligence, we also provide digital marketing solutions such as augmented and virtual reality to developers and agencies. This will empower them to sell their stock to clients more efficiently. Imagine having a platform that can market your project in a completely digital way, create a digital replica of your product, and then connect you to the right agencies to help you sell your stock at speed and at volume. We also have the infrastructure to allow clients to view, sign, and pay everything all in one place, all online. That's the power of our platform. We also utilize the power of blockchain technology to provide more transparency and more trust between all parties. And we're also using blockchain to reconceptualize the idea of communities around property and around projects. How does this look like? Imagine being able to interact with property developers and agencies directly in one digital platform and finding the answers to all of your questions from the horse's mouth, whilst also joining a community of other people who've also invested or are interested in the same project as you to share their comments, their thoughts, their ideas, whilst being rewarded simultaneously. This is the power of Yep Home. So what's the opportunity here available for you as investors? What we're looking to do is we're seeking to raise $5 million in capital to help fund our vision of revolutionizing the real estate sector. We will start with the brand new home segment, to which our competitors are sparse and our platform is already advanced. The opportunity for investors like yourself is to be involved in a company that will reshape how real estate is ultimately transacted, not only in Australia, but around the world. We have scalability built into our business model, as the processes required for selling property through a B2B2C ecosystem are ubiquitous worldwide in most developed countries. And so why Yep Home? Why now? The digital revolution is ultimately upon us. We're only now starting to see and realize the positive implications this has on our industry. We're at the front of the wave and pioneering the inclusion of advanced Web3 technology to bring about a digital disruption in our otherwise still traditional real estate industry. We want you to be part of the change.
Sorry, closing statement, please.
That's it. That's all I had. If everybody would like to check out our deal room, we've got a lot more information there, and you can reach out to me directly for anything you need.
Amazing. Thank you so much again. Perfect. Cool. All good then. Okay. So for our next presentation, I would like to invite Iggy Tan, Managing Director at Altec Chemicals, ASX ticker being ATC. Hi, Iggy.
Hi, everyone. I'd first like to start with a short video talking about our project. So let's see whether I can optimize it.
We can't see your screen. Okay, it is just coming up.
Just see whether you can see the video.
Yeah, we can see your slides.
The video is not playing, so let's have a look. I'll just stop sharing and start again. Can you play the video from that side?
No, we just see the slides. It looks like we can't play the video ourselves. You would need to play it from your side.
How's that?
Oh, there we go. We can see the video. It's not playing correctly. Sorry, Iggy. We can't hear any audio.
Okay, well, maybe you can just shift to another speaker and then I'll get ready for ones without a video.
Sure, sounds good. Perfect. So I will move on to the next presenter then. So I would like to invite Cody Kodrowski, founder and CEO at Right Choice Capital. Hi, Cody.
Good morning.
Good morning. Can you share your screen with us?
Yep.
Perfect. We can't see your slides yet.
Are they there?
Yes, just need it in full screen. So if you just go to slideshow, yeah, okay, all good. The floor is yours. Thank you.
Thank you. Morning, everyone. Right Choice Capital. We are expanding access to financial services through our various entities in our group, really focused on the underserved businesses and people in Southeast Asia, our primary markets being Singapore and the Philippines currently. Within our group, you see on the right side, we've got a couple of banks, finance corporation, currently one payment service provider in the process of taking a stake in a second one, several licensed remittance houses within the group, and we have our own technology team building platforms servicing the internal business units, as well as providing SaaS platforms for external customers. And we're in the process of obtaining our own insurance licenses, which will start offering a wider range of insurance products across our customer base in the next fiscal year. In terms of the market potential across our verticals, there's a large pie in each of them, which allow us to achieve a meaningful market share. In terms of our financial performance, look at the upper left corner, that's the existing Right Choice group. Figures there are in Singapore dollars, hundreds of thousands. We've had strong revenue growth year on year. EBITDA has been very steady for us and continuing to grow over the next forecast period. In terms of net income, we've historically been positive, dipped a bit negative during the pandemic, but flipping back to positive in the upcoming current fiscal year and years ahead. In short, the group has a very solid base. We don't require additional capital to execute across the existing business units. And this has allowed us to explore strategic M&A opportunities for additional growth. And that's not new to us. We've done some M&A in the past, so we've got good experience in bringing in new entities. And that brings us to the second bank opportunity, which we are currently in the process of completing. We have a signed term sheet in place for this bank. Due diligence is nearly complete, and we're already participating in the operations and actively involved with their board. In the bottom left table, you can see the revenue growth. If we include the second bank in the group, it just further strengthens what we already have from a base within the Right Choice Group. What's interesting about this second bank opportunity, it really expands our offering in the payment space. We will be the only bank in the Philippines providing BIN sponsorship through the card schemes. We are a direct member currently with MasterCard and UnionPay, and Visa is in the final stages of approval. Could happen as early as next month. And we already have some of the major global players in the space already under contract and ready to start issuing cards with us in the Philippines. My last slide here before we get into the investment side of things is showing an overall view of the group. Each of the entities with logos there are currently operating and running. Bank number 2 in the bottom right, I've mentioned earlier. We're just in the process of completing that acquisition. Insurance is we're going through the licensing process currently and should be able to have our own licenses there early next year. And then down in the bottom left, we are in negotiations for adding an additional payment service provider license and team within the group. As far as an investment, why Right Choice? We have a strong track record, been operating for 6 years. Some of the businesses that we have acquired have operating histories of 50 and 20 plus years respectively. We're experienced in managing investment funds, have a very good track record with both debt and equity investors to date. In terms of a competitive advantage, we have a unique set of licenses. On top of that, we have our own technology platforms and a growing customer base, which offers a nice ecosystem and synergies for us to continue to service customers in a variety of ways. And in terms of a management team, we are 100 strong now. Both an Asian and Western team combined with seasoned and extremely experienced individuals sitting on the board and in an advisory capacity. At this current time, as I mentioned earlier, we're not in need of capital to execute on the existing business plans. We are looking to raise between 5 to 10 million in equity, which will allow us to continue to grow at a faster pace and continue to execute on some of the M&A opportunities that we foresee coming up in the market. Apologies, our capital raising partner, Olav's Ritness from Ventures International is down with COVID, so he wasn't able to join on the discussion today. His details are available in our deal room, as is this deck. And I will flash up also my details if anyone would like to reach out and get in touch with us and talk further. So thank you guys for your time.
Perfect. Thank you for your presentation, Cody. And for the attendees, please feel free to connect with all the presenting companies today via their deal room. Next up, I would like to invite Iggy Tan for his presentation.
Right, thank you. Sorry for that hiccup. What I want to do is talk about some of the challenges of lithium-ion batteries. As you know, lithium-ion batteries have been in the news recently with fires. And essentially it gets so hot it gets to thermal runaway, and they're very difficult to put out because in a normal fire, if you stop the oxygen from getting to the fire, it goes out. But in a lithium-ion battery, it generates oxygen at the cathode end and is very difficult to put out. The other issue is that lithium-ion batteries operate in a very narrow temperature range. So they operate between 15 degrees to 35 degrees. And a lot of people know that the lithium-ion batteries reduce in their capacity down to 70% at 0 degrees. So they're unsuitable for very cold climates. The other issue is that the life of the lithium battery is very limited. It generally lasts about 8 to 10 years. And also the price of lithium has skyrocketed in the last 12 months. So a very difficult situation where the price of lithium is rising very rapidly. The other issue is the cobalt supply chain. There are ethical issues with cobalt supply. Most 70% of cobalt comes out of the Republic of Congo, and that's a concern for the lithium battery industry. Also, graphite, 90% of graphite comes out of China, and that is essentially a geopolitical risk for the lithium-ion battery industry. And then finally, copper. Copper is one of the major components of the lithium-ion battery. And so I'm posing the question, is there a battery out there that is totally fireproof, operates in a large temperature range, has a life of more than 15 years, completely free of cobalt, completely free of lithium, graphite, and even copper, and also manganese? And I'm introducing you to a technology that is called Serenergy battery, which is essentially uses salt as the major component, sodium as the, it's totally fireproof. It operates, it essentially is solid state technology. It hasn't got that liquid electrolyte like lithium ion batteries have, which is volatile. So it just uses solid state technology. So it's totally fireproof. It operates in a very large temperature range, so down to about minus 40 degrees, because it has got a liquid electrolyte. And the life of the battery is beyond 15 years. So a big advantage to lithium-ion batteries. The major advantage is that we don't have any lithium. We use salt or sodium and nickel metal powder. Sodium is very reactive compared to lithium, and essentially is readily available everywhere. We don't have cobalt in the batteries. We don't have the chemistry doesn't require cobalt on the cathode end. We don't have any graphite or copper also, and we don't have any manganese and also copper. So this is what the battery looks like. And essentially, when you charge the battery, sodium ions form a molten sodium anode. It's a self-forming anode, and when it discharges, it goes back to salt. We have a 100 megawatt battery project in Saxony, Germany, for our first phase of the plan. And recently we launched a 60 kilowatt battery pack, which will service the renewable energy of the grid storage market. We're not after money. We're a public listed company. So if you're interested in being an investor, it's very easy. You just go onto the ASX, and our ticker code is ATC. We got some 6,500 shareholders, good liquidity. And if you want to be part of the journey, please go onto the ASX and you can invest there. So our future is actually looking for the renewable energy and grid storage market. The market's growing at 28% year on year, a very exciting market indeed. Thank you, Rhythm.
Thank you, Iggy, for your presentation today. Perfect. So our next presenter today is Vijesh Satyanesan, co-founder at Connect One Club.
Hello, Rhythm.
Hi, Vijesh.
Yes, thank you. So I'll share my screen.
Yes.
Yep.
Perfect. All good. Thank you.
Thank you. So, hello everyone. So I'm Vijesh and I'm from Connect One Club. We build collaboration platform for farmer groups. And we are in the mission to this very familiar problem that several farmers face in this country. So we are all familiar of this particular issue, right? There will be a lot of surplus produce coming up from the farms, and they're finding issues in finding the buyers. Then eventually a lot of produce will end up in landfill. So if we take this issue a little more closer, and it's a big issue as well. Like this issue is estimated to be 36 billion worth of wastage is happening in Australia alone. So it's a big issue. And if we take this issue closer, there are two issues related to this. The first one is 40% of the farm produce is ending up in landfills. And the other issue is the farmers are finding it difficult to find the buyers for the low quality produce. And another one is there are a lot of the produce upcycling and recycling facilities, but the farmers are finding it difficult to find or connect with them. And another issue that the farmers face is, and finding the buyer for their produce it's not an easy task. Like there'll be a different kind of produce quality coming up from a farm. And whenever they try to find the buyer for a particular specific quality, and they will find a lot of issues. So these are the problems that we are solving. And what we built it's a collaboration platform for the farmer groups where farmers can come together as a group and they can do the aggregation of their produce and they can do the grading and sorting of their produce. And based on the grading, they can list the stocks based on the grade which is coming up in the platform. And based on the grading, they can conduct auctions and they can set up a harvest calendar which shows the pipeline of produce. And another advantage is the farmer groups will be able to set up a digital ecosystem which will help them to connect with the stakeholders. So since it's a digital ecosystem, through this platform, the farmers will be able to do a lot of negotiation with the potential buyers, and they can set up auctions which will help them to get the better price. And even they can connect with the banks, which will allow them to get bank credits and escrow accounts. And there is more advanced features like geo mapping and logistics management. So it's an end-to-end solution where farmer groups can come together and they can build an ecosystem which will give a lot of benefits for them. And as a case study, we started this with the cardamom farmer groups in India. And when we started, it was a very local, a small market. And through our platform, around 3,000 farmers were able to come together. And they started to aggregate their produce, and they have increased the market reach by 500 kilometers. And they started to get better price because it was attracting more buyers from the remote places. And eventually, they got around 10% increase in the gate price, and their operational costs reduced by 30%. And as of now, like we sold around $45 million worth of cardamom through this particular process. And this is our timeline and traction. We got a steady growth and a traction. So we launched in November 2019. Eventually, we got into different domains. And last month, we got a 100K grant from Sustainability Victoria Department. And we are using this grant, we are building a circular economy platform for farms. So that is the recent project. So we are actively working on that. And these are our target markets. We are looking for the farmer groups, farmer cooperatives, the groups which is coming from farmer communities. And then this is the size of the market. So we can work on any kind of the produce domains. And we are targeting around 5,000 plus farmer groups. And our the income, like the business model will be like $1,000 per month and commissions from a group. And these are our different business models. We got monthly subscription plans and the business support plans. And then we are building a marketplace for agri-tech solutions and products. And this is our team. And all our co-founders are coming from very strong technical and agricultural background. So we know the system from end-to-end basis, and we are building a solid system to cover all the scenarios. And this is the fundraising, the round we are running. So our current evaluation is $4 million. It's based on the traction and the product readiness, market opportunity, and the size. And we are looking for 400K to raise, and with the 10% equity.
Vijesh, sorry, closing statement, please.
Okay, yeah, so this is our roadmap. And yeah, so thank you. Yeah, so please let us know your questions or any comments on this. Thank you.
Thank you, Vijesh, for your presentation.
Yeah.
You can stop sharing your screen. Okay, all good. So for our next presentation, I would like to invite Bob Anderson, Managing Director at Longyard Capital. Bob, are you on the call with us?
I don't think I can't see Bob on the participant list.
Okay, so, oh, yes, okay.
Sorry about that.
It's okay, we're on.
Perfect. Okay, we can see your slides. Just feel free to put it in presentation mode.
Yep.
Okay, all good. Thank you, Bob.
Okay, thanks very much. Well, hello, folks. Bob Anderson here. Yeah, the investment I'm offering today is related to a current property development that we have underway. That's me there. We established a special purpose vehicle to raise funds to develop an over 50s retirement resort on a Greg Norman designed golf course. And short story is we're offering redeemable preference shares in the special purpose vehicle. That's Longyard Capital Proprietary Limited. Also offering quarterly fixed dividends and a registered first mortgage security over the property and all improvements. Firstly, just a little bit about me. I've been in the development business for 40 years, during which time I've held state and national roles in the largest development companies in Australia. The last 20 years, I've been doing my own developments. Collectively, done over $1.3 billion worth of projects, of which around $300 million have been in joint ventures and capital raisings. I do have a specialty in the retirement sector, although it's not the only thing that we do develop. The project that I'm referring to is known as Majestic Lifestyle Resort at Tamworth on the Greg Norman designed Longyard Golf Course. Why Tamworth? Well, demographics. That's what drives retirement villages, is the ageing population. The ageing population around Tamworth, 66,000, of which 50% are over 50. That's our target market. This is an over 50s lifestyle resort. And so there's 33,000 potential purchases within there as well. So that's where it's situated. You can see the greens or the fairways running around there. And there's the village itself. So what makes this project unique is the age demographic, as I mentioned, over 30,000 people over 50. There's no other comparable development in the whole Tamworth region at all, and it is situated on the Greg Norman designed golf course. Price point for houses in there is $479 for 2 beds, $540 for 3 beds. So all in all, 99 homes, as I said, on the Longyard golf course. It's to be developed in 5 stages. Stage 1 is underway at the moment. Total project value is around $50 million, although peak debt on the project is $11 million. And that's because we can develop it in stages. So as the project goes through, we're getting capital coming in on the way through the project as well to retire debt. It's situated 100 metres from the current golf clubhouse at Longyard Golf Course, and has an extensive community building to be built in stage 2. Yeah, current status, we purchased the site. This is not a startup. This is a project that's just commencing construction. Purchase site, February 2021. We've obtained the development permit, the construction certificate. We've appointed the marketing company, which is the top marketing company in Australia for retirement. That's one fell swoop. We've got a sales office in the main street of Tamworth, which will be moved to stage 1 once the houses are built there. We have a current sales team. They're taking deposits at the moment, and we've also appointed a builder on a master contract for the 99 houses. Fixed price contracts, reviewable every 6 months, and houses start completion in May 23. And civil construction is underway. As you can see from that small video, this was taken last week. Plenty of action on site. We're doing stage 1, which is 19 lots at the moment. So on to the investment. The structure itself is we've established Longyard Capital as the special purpose vehicle. Investors acquire redeemable preference shares in Longyard Capital, which then on-lends funds to the developer. Longyard Capital then takes a registered first mortgage. In fact, it already holds a registered first mortgage over the land. That's because there's no other lenders in this project, just the capital raising. Developers pay interest to Longyard Capital. Developers being myself and my business partner, Peter O'Brien, and Long Yard Capital pays investors quarterly. And at the end, shares are redeemed at full face value, and the capital is returned to the investor. Of course, asset compliant through intermediaries. The investment itself, nuts and bolts, shares are $1 each, fixed minimum investment is 100,000, then in lots of 50. Dividends, as I said, paid quarterly at 9% guaranteed interest rate, terms 24 months. And security, as I mentioned earlier, registered first mortgage over the land and all improvements. So it's ideal for cash on deposit, lines of credit offset, and about 40% of investors at this point, there's about 40 at the moment, have used self-managed super funds to invest. So what makes it a great investment? Well, the developer, myself, 40 years experience, my business partner, 25 years experience in construction and project management and development. I've also put over $1 million of my own capital into the project. I always do projects. Yes?
Sorry, Bob, closing statement, please.
Thank you. Fully compliant. So where do we go from here? Well, the deal room has the information memorandum and other information. Alternatively, you can email us there or the phone on the screen. That's it. Thanks.
Perfect. Thank you for your presentation, Bob. Yeah, you can stop sharing your screen. Okay, all good. So next up, I would like to invite Brendan Lyons, Head of Perennial Private Investments at Perennial Partners, for his presentation. Brendan, are you on the call with us?
Sorry, he's just jumping in another account, and I'm just promoting to a panelist now.
Okay. For the attendees, I would just like to remind everyone that please feel free to connect with all the presenting companies using their deal room. When you're on CRISP, you will see the link in the exhibitors tab and also on the agenda. Brendan, can you please turn on your video and unmute yourself? Perfect. All good. You're just on mute.
Okay. Hopefully you can hear me and see me now.
Yes, the floor is yours. Thank you.
Thank you. Yes, my name's Brendan Lyons. I'm head of Perennial Private Investments. We're a Sydney-based funds management business that runs a number of different strategies. We manage in the Perennial Private part of the business, which we're talking about today. We manage a series of private growth funds to invest in late stage pre-IPO private companies, mainly based in Australia. And we have a fund that's open at the moment called Perennial Private Ventures, PPV. We can talk about that at the end. In terms of Perennial Group, for those who don't know us, we've been operating since the year 2000, so more than 20 years in the investment market. We have around $8 billion under management. $700 million of that is invested in the private funds I just mentioned. We've got 6 funds that can invest privately. And over the 5 years we've been doing this, we've made 88 private investments. We've had 24 IPOs to date. Another 6 companies or positions we've exited through private takeovers or sell downs. I lead a team of 5 people based in Sydney and Melbourne. And in addition, we have another 11 based in our listed small and microcap business, which we work closely together with. In terms of where we invest, we're very much focused on the growth and scale part of the private market. We're not investing in startups and early stage businesses. That's the VC end of the market. We're not investing in mature businesses, which is very much where private equity tends to focus. We're looking for businesses in this purple box here, which is becoming a larger part of the Australian market as companies remain private for longer and want to stay private before they IPO as much bigger companies or look to exit through a trade sale or sell down at a later stage. The businesses we're investing in are proven businesses. They have revenue and customers, things we can analyze. That's important to us in terms of understanding their growth outlook and determining the right valuation for those companies. Perennial is somewhat unique. We've been the pioneers in developing pre-IPO and private growth investing in Australia in the last 5 years plus. You can see on this chart, we have a series of funds, as I mentioned earlier. The PPV fund in the purple is the fund that's open at the moment. We also run a series of private to public funds, which are pre-IPO funds in the pink, and the blue are our listed funds which invest at IPO and listed equities. And what is different, I think, and what's unique about the perennial position in the market is we're able to provide and partner with founders and private business owners and provide them growth capital, pre-IPO capital, invest more at the IPO and go on to hold them as public companies, which is quite different from other private strategies you see in the market. We, because of our experience in investing in both private and public markets, we think portfolio construction is critical to give the best returns possible for our investors. We do break the investments down into three major buckets: early wins, portfolio core, and outsized returns. We think it's important to have investments that are maturing at different stages with different return profiles. What that does do is mean we can get distributions or returns back to investors more quickly. We can avoid the negative J curve you see with a lot of other private strategies such as venture capital and private equity, and you're reducing market cycle risk by ensuring that not all investments are maturing at the same time. By doing an average of the return expectations here, you can see we're targeting a net return or IRR that's after fees of 25% per annum from this portfolio, and in our earlier funds we've been able to generate in excess of that. Here's some examples of the sort of companies we're investing in. It is a very diverse portfolio. There's 15 to 30 companies per private companies per portfolio. They're a mixture. They're all Australian businesses which have now gone on to become global. Planet Innovations in medical devices, Livewire is in gaming and marketing technology, With You With Me is in HR and HR technology. Indebted is a professional services business around debt collection and digitization of that process. These are all businesses with meaningful revenue. Planet Innovations above $100 million. The other three are all in the $20 to $50 million revenue range. So they are already successful businesses. And you can, while I haven't provided all the numbers on this slide, we'll be able to invest in them at very attractive multiples given the perennials position in the market and how they see us as a life cycle partner for these companies. In terms of our competitive advantage, one thing that we are fortunate, we do have an extensive network, having been the pioneer in this market across the five of us in the team and our broader professional networks and those that our listed parent or listed funds also bring is a very large ecosystem of deal flow. We met with over 900 private companies last year. We don't think anyone has anywhere near that deal flow. We're investing in less than 5% of those numbers. In terms of life cycle funding, as I mentioned earlier, we are unique in being able to provide the funding that can travel with the company on its whole journey. We're not looking to exit at the IPO, but we can go on to hold companies as public businesses going forward, and that's a key differentiator. Portfolio management we think is critical, ensuring that you can get a smooth return profile for our investors by looking at the experience we have in earlier funds to ensure we achieve that. And the team is an experienced team. We're all senior portfolio manager level people with both experience in both private markets, public markets, and transactional experience. Why now?
Sorry, Brendan, just a closing statement, please.
Yeah, so we think this is a great time to be investing in private markets. What we've seen is companies want to stay private for longer. The pipeline's never been greater. We've got an opportunity to set very good valuation in terms by investing in private companies, and just and it's an opportunity to avoid some of the volatility you see in the IPO and private and public markets in recent times. The term sheet's here, which is also available for those who wish to invest in the fund, which is open now.
Thank you for your presentation, Brendan. Okay, perfect. Next up, I would like to invite Andrew Charles, Commercial Ops Director at Pictor, for his presentation.
Thanks, Rhythm. Can you hear me okay?
Yes, I can.
Okay, brilliant. Let me just pull up the deck.
Yeah. Okay, we can see it, just need it in presentation mode.
No problems.
Okay, all good. Thank you.
Great. Hi, everyone. My name's Andrew Charles. I'm the Commercial Operations Director for Pictor. So Pictor is an in vitro diagnostics company with a little bit of a difference. We focus everything that we do around our multiplex platform, which enables us to develop highly accurate and cost-efficient tests for some of the most challenging and complex diseases impacting both human and animal health. The diagnostics market is a huge one. We're talking about a US $90 billion market in human health, $10 billion market in veterinary animal health, Both of those markets are slated to grow between 6 and 7% over the next 5 to 10 years. We did a funding round earlier this year, and we've actually invested a lot of that resources, that funding, into our team, which we've built out, predominantly in the R&D space. We've also equipped them with the most up-to-date scientific equipment to accelerate our pipeline. We've got now a team of 36 people strong with over 400 years experience working in the life cycle space. So I talked about that pipeline and the acceleration of it. We're now in the position where we've got 4 products that we're looking to launch over the next 6 months. In fact, one of those products we launched both in New Zealand and in the US, which is a COVID-19 antibody test over the past 2 weeks. Everything that we do centers around this multiplex expertise, and it is an expertise that we've cultivated over a number of years. But we don't rest on our laurels around that being our competitive advantage. We ensure that we get exclusive licenses for all of the proteins and antigens that we use in our diagnostic tests, and couple that with clear patents that support our diagnostic development. And we're looking to raise $5 million in this funding round, and that will help us bridge towards some of these near-term commercial milestones in support of these 4 global product launches. So what are some of the common problems within the diagnostic space at the moment? Well, it has been for a while, and it continues to be quite a challenging area to diagnose in a timely fashion. And we still predominantly take a sequential approach to diagnosis within the diagnostic field, which not only is time consuming, but also costly. There are lots of great new diagnostic tools, but they're expensive, and cost prohibition can really restrict access to these tools for most people. And the last point I wanted to call out here is around animal health diagnostics. So our understanding of animal health diseases has progressed significantly over the past years. But the diagnostic tools that support those diseases have not. So what is the Pictor solution? Our platform is comprised of 3 main things. The first thing is the assay, and the assay leverages a 96-well ELISA. Now, this has been the backbone of laboratory testing for decades, but what we've overlaid is our multiplex technology, and that's that 5x5 grid that you see, and that's printed on the inside of each well. That enables us to print up to 25 different analytes that we could be tested for as part of our test. The second component is the reader. The reader takes ultra high definition images of those plates that can then be interpreted by the software. And that software takes that data and helps perform an analysis and provide a recommended diagnosis. Now, the multiplex platform enables 2 main strategies. The first of which is multiple diseases. So you'll see that at the top there. You can take multiple different diseases, print those within a well. There might be diseases that share a common symptomology that can help speed up a diagnosis. The second approach is to take one disease, but take multiple different markers of a disease within a single well, and that can help improve a test accuracy. When we look at the competitive landscape, I suppose the key competitive advantage by using a multiplex ELISA is that we're able to develop a really accurate test in a cost-effective way. Cost-effective because we reduce the consumables that are used to get to a diagnosis, but also able to reduce the time. This has an added benefit for laboratories where they have increased throughput. So when we look at our new products that are coming to launch, we have 2 COVID-19 antibody tests, one of which is just launched and 2 others in the animal health space. What I'll say is that each of these products has distinct competitive advantages in the large markets that they're about to enter. We've developed relatively conservative forecasts, I would say, relative to the size of the market. But our team are excited about going out there, achieving those forecasts and chasing down some of the significant upside opportunities that we see across the global markets that we're looking to enter.
Andrew,
yes.
Sorry, closing statement, please.
Sure. So this is our management team, a diverse set of experiences across all aspects of the life sciences sector. When we look at the ask, this is basically an extension of our round earlier this year. We're looking for $5 million investment, similar terms, share price of $1.50 with a sweetener of 1 stapled option for every $3.33 invested. The funds will be used to support the completion of the R&D for animal health, and also support the global commercialization of the 4 tests that I've mentioned today. Feel free to reach out to me if you want more details. My email's at the bottom of the screen here or through the deal room. Thanks.
Brilliant. Thank you for your presentation, Andrew. Perfect. Next up, I would like to invite Chris Mears, co-founder at Wild Clean, for his presentation.
Hello, my name is Chris Mears. I'm going to pull up my screen here.
Yes, could just put it in presentation mode.
There you
Okay,
go.
all good. Thank you.
Good. Okay, great. So my name is Chris Mears. I'm one of 4 co-founders of Wild Clean. Our purpose and mission is to unmuck the world. We're really, we're trying to solve a major problem, and that's the plastic crisis that's polluting our planet. And so we're doing that through creating a plastic negative home cleaning brand. So we're on a mission to take the plastic out of your home, waste out of the waste streams and trash. Excuse me, sorry, just having some difficulty here. So the big problem that we're really trying to solve for today is the plastic that's polluting the planet. So this is continuing to grow in the U.S. Recycling was less than 5% in the last year, which is just atrocious. So we have to come up with businesses and companies that help kind of combat that. So what I'm going to show you today is kind of how we're going to set out to do that. So this is our lineup. So we've created what we call basically a set of cleaning products. So we have a multi-purpose glass cleaner, bathroom cleaner. These are all in a powder format. They're scientifically proven. We've gotten really, really great people in R&D behind this that came from Method that helped us formulate the products. So you essentially pour the powder into the bottles, essentially the forever bottles, and you just add water, and it comes out with a great product. The packaging is all compostable. Right now we have the 3 cleaners, and then we also have hand soap as well. The bottles are all made with 100% PCR. And they're free of toxins, dyes, and obviously plastic compromise. So it's pretty simple. We're starting off, we launched in New Zealand earlier this year as a direct-to-consumer business. So the customer goes to our website, which is wildclean.com, and they can order one of 3 starter kits, either our full kit caboodle, which has everything, our Clean Freak, which is just our 3 spray bottles and corresponding refills, or our Hands Up starter kit, which is just our hand soap bottle and the corresponding sachets with it. And then the goal is to get customers on a subscription. So whenever you need it, you can set it up. So every 4, 8, 12 weeks. And then over time, what we're looking to do is continue to expand products throughout the home. So hopefully next year, basically what we're looking to do is launch into dish and dishwasher and laundry. And then longer term, we want to go after categories that are big plastic polluters, whether that's in personal care, beauty, dog, home. So we want to continue to try to, over time, own the home. So what we're really excited about is we're really the world's first certified plastic negative cleaning company. Essentially what that means is a lot of companies out there are trying to get to plastic neutral or carbon neutral. We're taking it a step further. So essentially for every bottle that we sell, we remove 2 from the wild. And we do that through a partnership with Repurpose Global. And so we basically calculate how much plastic we sold over a period of time and pay them to help remove plastic from areas of the world that don't have the infrastructure that manage the waste. And so this is something we feel really proud of, to be this really true impact business. We're also carbon negative. We're a certified B Corp corporation. We're cruelty free. And then we're really proud of our compostable packaging as well. It's a huge market. It's 40 billion. So this is just in household cleaning. Over time, again, the brand we believe can stretch into other categories. into, like I mentioned, in beauty and other areas, which we think we can really go after in a really unique fashion. So to date, we've helped remove 1/10 of plastic waste already from the wild, and we've already really helped eliminate 10,000 single-use bottles. And that's really by selling our powder sachets and refills that just go into the forever bottle. You use the bottle one time and then you just get the refills. So you're not getting into that waste of single-use plastic. So this is our go-to-market plan. So we, two of the co-founders are in New Zealand, in Wellington. And so we've launched in New Zealand, and then we plan to launch in the US in 2023, and then in 2024 into Australia.
Chris, sorry, closing statement, please.
Yep. So we're seeking a $500K convertible note. We're going to use this to launch into the US in Q1 or Q2 of next year. And then we'll use that for digital growth marketing, brand video, and to really help us get going. And then over time, round 3 will be a pre-IPO round to help us launch into Australia and global.
Thank you, Chris. That was a great presentation, and we love the work that you're doing, for the environment. Perfect.
Thank you.
Can you stop sharing your screen, please?
Sorry.
No worries.
Stop share.
Okay, perfect. All good. Thank you. Next up, I would like to invite Ega Menhau, founder and managing director at Primacy. Ega, are you on the call with us? Yes. Okay, perfect. There you are.
Thanks, Rhythm.
We can't. Okay, your screen is just coming up.
Hi, everyone. And thank you,
Sorry,
Rhythm.
Ega, your screen is still loading. It hasn't come through yet. Can you stop stop sharing it and then reshare it? Okay, it's coming up now. I guess there was just a bit of a lag.
Okay.
Maybe try it again now.
How's that?
Give me a moment. It is still loading. Still hasn't loaded. Can you try again? I guess you got
I'm going to
dropped
try again. Hang on 2 seconds.
off.
Okay.
Okay, perfect. I can see it now. All good. Thank you, Ega.
Okay, thank you for that, and thank you for your time, everyone. My name is Aga. I'm the founder and managing director of Primacy. We're a regulatory technology company based in Singapore with operations in Australia and now the UK. We're helping bridge the gap between business and their ESG obligations. Rhythm, I just can't seem to be moving my hang on 2 seconds. Let's
Yeah,
start
sure,
again.
no problem.
Okay. Can everyone? Okay, I think that's better.
Yes, that's all good. Thanks, Ega.
Okay, so with more than 9 out of 10 publicly traded companies adopting ESG, it's one of the biggest trends in the world today. ESG offers numerous benefits, including reduced business risk, better financial performance, and higher returns on investments. However, the industry faces a couple of problems. First is everyone needs to have greener credentials. And the second problem is greenwashing, with most of the problems actually coming because there is no set standards globally and the increase of over 950 plus regulations in the world that companies just have to get a grip of. So how have we solved those problems? Actually, I'll go back to the market. So the ESG reporting mandate has increased by 74% over the last 4 years and continue to grow today. In fact, the market is worth about $12 trillion worth of opportunities, creating 300 million jobs around the world. That's 27% of all revenues of the 500 largest companies in America and 31% of their revenue. 85% of asset managers in the ESG space say it's a priority for their company, but only 64% were concerned about the lack of transparency and corporate disclosures of ESG's activities. So there is a major gap in the reporting market, and that is the ability of confirming or validating data as well as matching it with regulations. We've solved that problem at Primacy by developing our own patent pending technology called Optimal. It's a markup language that helps us take legislation into machine readable code that allows us to create digital workflows that is able to be used in compliance, especially for ESG reporting. We've launched, as of yesterday, in the Singapore market, ESG First. It basically combines our digital legislation library, in this case, ESG obligations, with available data, both third-party as well as client-based data, to create the first evidence-based ESG reporting tool on the market today. So how does it work? Primacy provides a legislative guidance library, and we basically partner with data companies. So in Singapore yesterday, we announced a partnership with Stacks, which is a ESG data company that is working with the regulators for financial sustainability reporting. Together, we create ESG First reporting on their platform for thousands of companies across different industries across Asia Pacific with their verified data. Our technology today, we've been around for 3 years. It's taken us a while to establish Optimal and develop our own language. We processed our patent back in 2001. In 2022, we received our written opinion saying our claims were commercially viable. We've signed up some clients here in Singapore and recently launched our ESG First program, and yesterday announced our partnership with Stacks here in Singapore, and soon to announce a larger partnership in Singapore as well. Our team is made of quite diverse individuals with very specific skills. I myself come from a technology background, having run and listed companies both in Singapore and Australia. Laura, our co-founder, is an ex-lawyer, 13 years with Rio Tinto and a recent INSEAD graduate. Jennifer is a Wharton MBA, and Johan, our sales director, working for IBM and ServiceNow across Asia Pacific. We're currently looking to raise up to $1 million, either as equity or a convertible note, to basically deliver ESG First to one of our clients here in Singapore, which is a large global technology player within the financial markets services firms. Our agreement with them is to provide our platform across their global financial services platform as a service. And we need the funds to basically develop the proof of concept with them and roll that out on a global basis. We have done a very small family and friends raise of 1.5 million, and the rest of the funds have been provided by the co-founders. The money will allow us to get to our year 1 horizon, which is $1 million ARR, taking us further to year 2 and 3, which should get us to 10 million ARR in returns. Quick, based on our forecast on contracts that we have in place. And if you'd like to find out more about Primacy and our ESG credentials and reporting tool, please contact me either here or via our Chris Dilworth. Thank you.
Amazing. Thank you so much, Aga, for your presentation. Next up, I would like to invite Gareth Beasley, CEO and co-founder at DCOM.
Hi, Rhythm. I'm able to start the video. I don't think you've appointed me to a panelist just yet. Oh, there we go. Thank you.
Okay, perfect. Can you share your screen with us?
In process.
Okay. Yes, all good. The floor is yours.
Yes, thank you. Thank you, Rhythm. Well, good afternoon, good morning, or good evening, depending largely on where in the world you might be during this stage. My name is Gareth Beasley. I'm the CEO of DCOM Blockchain. Welcome to DCOM, a future where the real and digital worlds meet. This is called asset tokenization. The World Economic Forum predicts that the global blockchain market will represent 10% of all GDP by 2025. That is an estimated $10 trillion in market size. DCOM is registered in Australia. With recent news in the crypto world, it's now more important than ever to ask who, where, and how. Now, tokenization isn't a cryptic message in crypto. Visa and MasterCard have done it for decades. What we are doing is adding in the future of technology to the same outcomes with real assets. To make sure this new technology can be accessed by everyone, we are making it easy, efficient, and instant. At its core, blockchain is the single most open, transparent, and secure set of transactions in the history of mankind. The DCOM solution is incredibly fast. Imagine recapitalizing your asset and accessing the funds in less than 2 seconds. Compared to other technologies that are similar, DCOM is faster, cheaper, and easier to use. That is considered the trifecta of adoption. The solution we provide is out of the box in 2 specific ways. 1, we understand how assets work. And 2, we understand what people need to make it work. Most importantly, though, is we walk our talk. Without even one VC, we've already built the technology, built partnerships, and community investors. No less than 6 solar farms, 1 renewable energy data center, 1 carbon credit platform, 4 established blockchain companies, and many others are already well underway on the DCOM platform. We've set the bar at being good people, building trust and creating positive outcomes for you and positive outcomes for our community. All this talk of community, though, really means nothing without action. Our ambassador program took just 4 days to be filled. From the 5th of October until today, we've now exceeded over 100 community investors. We did say that working with action is how we grow, and this really does demonstrate it. Without so much as breaking our stride, DCOM has over $3 million worth of value committed. Our actions will always come first, and then we will speak about it. As a team, though, we are kind of fussy about putting our money where our mouth is, having invested well over $5 million of our own to get everything started. Besides, for a very clear path forward, we'd love for you to join our deal room and find out more about DCOM. Every single tiny detail of our plans have been exceptionally meticulous in each aspect. You can join our rapidly expanding, diverse investor pool, which covers nearly every single continent on Earth. We don't just say community, we engage it, we grow it, and we live it. You can also find out more about DCOM in our live in-person events or an online event. Our team is in Sydney at the moment and hosting an event on the 1st of December, which is tomorrow, and the 5th of December in Singapore, or you can register for our online event. All details are in our deal room. Our team is incredibly seasoned experts in fields in which we specialize. From expertise spanning decades in renewable energy, blockchain, and business, we really do have it all covered. Lastly, DCOM fills the space between the real world and the digital world wanting to access them. And we certainly hope that you will too. You can find out more at decom.network or as mentioned in our deal room. Thank you.
Thank you for your presentation, Gareth. Amazing. Next up, I would like to invite Andrew McVeigh, founder at Remara. Andrew, yes. Perfect. All good. All set up. Thank you.
All good. Yep. Perfect. Thank you. So Remara is a Australian-based investment management company. We've got three verticals, being real estate, tactical opportunities, and our private credit business. Currently, we have more than 500 million of assets under management, predominantly within our private credit business. We have close to or just over 60 employees in our portfolio companies, and we've got 4 investment professionals across the firm. We are launching our new private credit income fund. So our new private credit income fund is been built off of the current strategies we're running for institutional investors at the moment through private placements with the firm. And essentially our new private credit fund is open to wholesale investors and high net worth individuals. The key attributes of the fund is monthly distributions. We do have a quarterly redemption process. It is invested into floating rate instruments. So while we've seen a very large escalation in the RBA rates, our fund and our investors have not been penalised through that as we've moved up with those increases in RBA rates. And at the moment, we are achieving post fees 10.25%, as I said, with distributions paid monthly. The fund is an open-ended fund, and we have a minimum of $50,000 as an investment hurdle to be able to invest into the fund. In terms of the underlying credit that we invest into, so really what we've built is a portfolio that goes across the credit spectrum. So this achieves kind of three core things. It improves the diversification. So we have very limited concentration of individual loans and individual obligors across the pool. We've got liquidity that we're able to create. So a number of the asset classes, and I'll touch on those in a moment, but a number of the asset classes that you can see on screen have different investment tenures. So with that, we can actually create a pool of very highly liquid underlying loans, and that also improves the yield because we're able to mix and match a pool of loans that go across the entire credit spectrum. So in terms of underlying credit investments, we've got asset and equipment finance, so traditional ABS products. We've got business loans both through term and overdraft. Trade finance and invoice finance and insurance premium finance are 3 very short dated products. So essentially they're anywhere from 90 to 120 day loans that are provided to businesses, and that provides the genesis of the underlying liquidity and the ability for us to be able to provide quarterly redemptions to investors. And we mix that with real estate development as well as completed asset real estate loans, and that improves the overall yield of the portfolio. And we do have a very small component of consumer credit, again, predominantly within the asset finance base. In terms of the fund advantages, Remara is built on a co-investment strategy. So essentially, we are vertically integrated with the underlying loan providers. So what that essentially means is Remara's got the equity investment, management control, board oversight, and credit oversight of the underlying originators. And we also take a ownership portion in the underlying loans. So that first loss piece is a 5% investment into each and every loan that is made through our vertical integration platform. So that essentially means that before any fund investors will lose any capital or have any returns degraded, we as the investment managers would lose our full 5% investment into each of the individual underlying loans. So that really hones our focus in terms of credit and ensures that we're aligned to the ultimate investors. A couple of the key advantages that we've got liquidity management, which I have touched on in terms of that diversified pool of underlying credit. With that, we can enhance our portfolio return as overall. And as I mentioned, we're currently achieving 10.25% post fees in market paid on a monthly basis to investors. We do have the aligned management with our 5% first loss contribution to each and every loan. We do have very limited concentration of individual obligors and individual loans across our pool, and that's quite contemporary in the market at the moment in terms of a lot of private credit is very much focused on larger scale real estate and specific real estate debt, and that comes with very significant concentration risks. As a result of the underlying pool and underlying warehouses we invest into, we're able to provide a floating rate return. And as I mentioned previously, we have been able to increase our return and ensure that the margin and spread for investors is maintained, even with the fast pace escalation of the RBA interest rate increases that we've experienced over the course of 2022. We do have monthly distributions and a quarterly redemption process. As I mentioned, this is an open-ended fund, so we do offer quarterly redemptions, and the liquidity ability for us to manage those redemptions is built on the underlying pool of loans that we invest into, and we have a very highly experienced team that is essentially managing this strategy, which, as I said, has more than 500 million invested in to it at the moment, with a number of Australia's largest investors participating. In terms of the team,
Andrew. Sorry, we are on time.
Sure. In terms of the team,
can you give a closing statement, please? Thank you.
I will. In terms of the team, it's myself with my Brookfield asset management experience, managing the Asia Pacific platform for Brookfield, and David Verschoor, who's also managing partner, who is former Natixis and BNP Paribas, and has a long track record in terms of securitization and private credit investment. Thank you.
Thank you, Andrew, for your presentation. Next up, I would like to invite Barry Amor, Director at DigiSpectro. Perfect. Barry, you're on mute.
Okay. Can you hear me now?
Yes, yes. Thank you.
Hi, I'm Barry Amor, Managing Director of DigiSpectro. Next is, we are a manufacturer of, designed and manufacture color reading systems, and specifically designed in the first instance for analysing cosmetic, analysing for formulation or colour matching of cosmetics, but also for detection and monitoring of medical conditions, and that we can actually scan below the skin surface and look at information, for example. Next. The cosmetic market is obviously a very substantial market, growing at over $500 billion US dollars per year. But and so consequently, that is the market that we're specifically addressing in the first instance. But and we have by exhibiting at various cosmetic trade shows around the world, we've been able to develop a substantial prospective customer list. But the product can also be used for analysing other applications such as paint, for example. Next. Our go-to-market is that we're not addressing the end user market. We're looking at distribution through wholesale distribution companies and cosmetic companies. We believe that we can achieve substantial volume sales. For example, from the trade shows we've attended, we've been asked for quotes of 1,000 units at a time. Next. And do we skip? Do we? Okay. As we're developing a spectral curve, we can not only match colors, but we can also formulate. And this is unique as a spectrophotometer that in the design of the device, it can be used for applications where spectrophotometers have not previously been used. And we're rather proud of the fact that we received a Good Design Award for this in 2020. Next. There are no other devices, as I mentioned before, similar to the complexion device, in that it is in the format that we've developed it, and it's also patented and trademarked worldwide. It's very much a spectrophotometer in a handheld Apple-type device. I mean, people that we exhibited to, and the use of the device, it's just so user-friendly and if Apple forgive me, very Apple-like. Next. So we have manufactured, prior to the pandemic, we manufactured 20 prototype units for evaluation and testing, and they're the devices we've used at trade shows since then, and received such a positive reaction. We're currently manufacturing 200 of them, which will be available for sample sales at an ex-trade show, which is going to be at Cosmoprof in Bologna next March. And Cosmoprof is the biggest cosmetic trade show in the world, and they have massive attendances at these shows of hundreds of thousands of people. So this is where we're going to be in a position to really address the demand that we will create. And we're looking to raise 500,000, which will be used specifically to manufacture the product and the distribution costs associated with that to meet the demand. We've raised previously 500,000 of founders' funds, and we've received a government grant of 500,000.
Barry, we are on time. Closing statement, please.
Next. The profit and loss will be significant. The sell price is around about 600, build cost 150. So it leads to a very profitable device. We have a significant management team, which is on the next slide. I've been involved in significant developments of overseas focused companies. We have a very highly talented engineering person in Don Fletcher, and David Mercer is the founder of Mincom, and is very well respected and known in the industry.
Barry, sorry, thank you. We have to move on.
Thank
you so much for your presentation. I would now like to invite our next presenter, Rick McElhinney, CEO at Sunshine Hydro.
Thanks, and I'll just
Hi,
share
Rick.
my screen.
Perfect, just need it in presentation mode.
There we go.
Okay, all good. Thank you, Rick.
Okay, thank you. And so my name is Rick McElhinney, and I'm the CEO of Sunshine Hydro, which is a company that's set up to make use of pumped hydro in ways that it hasn't been used in the past. Basically, we make that pumped hydro financially viable. 2015, we set out to decarbonise the planet using this proprietary technology that we've developed. And it pretty much lends itself to deep energy storage, but we focus primarily on pumped hydro because that's the proven technology that's worked for many, many years. Our team, our board of directors is pretty significant. We've pulled together some people with a lot of exit experience, developing large companies, a lot of international experience, and very, very capable team. And because of what we're doing and because it's quite attractive, we've been able to attract some of the best people in the industry to help us roll out our technology. The technology itself, it's software primarily, but there's also a lot of methodology in what we do. We change the way that pumped hydro works, and the way we do it is typically pumped hydro takes advantage of low-cost energy to pump water to the upper reservoir of a pumped hydro station or to charge a battery, so to speak. And when the energy price goes up, typically in the evening or breakfast time, it'll sell into a higher price, and the arbitrage between the cost and the revenue generated gives the revenue to the project. Problem is, it takes about 30 years to pay off these projects, and that's simply not attractive enough to make it easy to get infrastructure investors involved. So we've changed that completely, and we multiply that revenue profit or the gross profit of the projects by a factor of 3. So we're basically taking solar and wind input. We're using 100% green energy. We're using algorithms that have been developed over the last 7 years to make it all work. We change the way it works in that we don't care as much about the daily arbitrage as we do about this little area on the right-hand side here called firm green energy. And our purpose is to replace fossil fuel generated energy. And we do that, very effectively using, fluctuating wind and solar energy, but using a big battery to make that possible and managing that continuously. We also take advantage of a product, hydrogen, which is generated through an electrolyzer. And this adds a load to the system. By adding a load, we end up with a lot more wind and solar required to drive this ecosystem that we develop. So it's not really a pumped hydro system anymore. It's an ecosystem we call a super hybrid. The way that works is very simple. And we take a typical pumped hydro project with a 50 million annual profit and a 28-year payback, and we push it to a 220 million annual profit with under 10 years payback. These are the revenue streams that are available within a pumped hydro station. And the grey area here is what a typical pumped hydro station generates. And all these additional revenue streams add to the revenue for the project, hence making it a lot more financially viable. 50% of all the revenues of a super hybrid are contracted, and 100% of it is 24/7 carbon-free energy. We validated all of this. This is a report we put together, or Alan O'Neill has put together independently, showing the 300% increase in revenue that we generate over a period of 4 years. So we have good validation on what we've done. The actual operation of the system is through an interface that you see here. And we're continually driving and manipulating the energy flows to maximize this firm green energy section right here. And that's what we care about specifically. Our revenues are quite high. We're basing these revenues on 10 projects alone. And obviously we're going to do a lot more than 10 projects, but the numbers get a little bit too big. So we've simply limited to those 15. And $5 million in convertible notes are underway, 8% coupon with a conversion rate of 30%. And we have signed a $65 million term sheet with Concept Green Asset Management, which is a fund of funds based in Melbourne. And the deal room's open, and we look forward to talking to people about the opportunity. Thank you.
Perfect. You were absolutely on time, Rick. Thank you for that.
You're welcome.
Amazing. Okay. So our next presenter today is Jave So, co-founder at RSG.
Hi, good day. Can you hear me?
Yes, I can. Your screen is just coming up. Okay. You can just put it in full screen.
Okay, all good?
It hasn't come in. Okay, now it has. The floor is yours. Thank you.
All right, great. Thanks. All right, good day, everyone. My name is Jave, and I'm the CEO and founder of RSG. We're basically an esports and gaming entertainment company that's based in Southeast Asia. So, well, first, I'd like to talk about the opportunity at present, right? If you look at some of the trends of the world today, spectator sports viewership has been declining steadily over the last 5-10 years. And the only sport that has increased viewership year on year has been esports. And the reason for that is, again, because of the accessibility of gaming to today's youth. And also, more importantly, this was made possible by mobile gaming. So across the board, we see that the gaming industry is now about $145 billion in comparison to the box office at 42.5 and music industry at about 20.2. With that being said, the other trends that point towards the importance of growth within the entertainment industry is the fact that you have a big bunch of young people that are very interested in esports, in gaming, and that would fuel the growth for tomorrow. Second, if you look at the consumption habits and trends, instead of having product design and marketing being done on the back end, and after that having that being done on the digital front, a lot of the consumers today would like to be involved in the process of purchase, and that gives rise to the growth of the fan economy. And thirdly, you also see that content consumption has shifted greatly today in a more decentralized fashion and function, where people do not necessarily get their news and updates from a centralized source of medium or news outlet, but instead through social media, through influencers that follow. And all of this point towards the opportunity that RSG is well positioned to capture. So what is RSG? Or basically the most influential gaming company within Southeast Asia's 3 key markets, Singapore, Malaysia, and the Philippines. Combined, we have more than 60 million followers across 4 main platforms: Facebook, TikTok, Instagram, and YouTube. In terms of the esports front and our achievements, we have continuously produced good results in all 3 key markets, and we also have some of the best talents under our management. So here are some numbers in terms of how we have grown over the years. We're currently well into our 5.5-year milestone. In terms of the fan base, we've reached more than 60 million we've more than tripled the growth rate in just this year alone. Revenue growth was double year on year. This year we're also projected to hit more than double, and next year looking at profitability. In terms of expanding talent pool, we kind of are also growing very steadily over the years. And most importantly, the clients that we serve are aimed at looking at about more than 100 within this year alone. So next up, I'd like to talk a little bit about esports performance. We're the only team to have achieved a Grand Slam in Malaysia across all 3 popular mobile game titles last year. And we're also the only leading mobile esports team to win 1 regional and 4 domestic leagues in 3 different MPLs over the last 3 years. Combined, we have more than 200 tournaments under our belt and more than 21 major championship wins, 51 podium finishes. In terms of our expertise in creating gaming superstars, we have a subsidiary under us, which is Pulse Nova Entertainment, looking at building idols within the gaming industry, and more importantly, to be able to monetize this on platforms such as YouTube, and also building a stronger community for that localized content offerings. Next up is about our expansion in Web3. Now, we believe very firmly in Web3 because of its ability to help us monetize on the digital front. We believe in building an ecosystem that allows the valuation of our community, and more importantly, to measure the activity within this particular group of fans that we have very core. So Web3 technology and the NFT portion allows us to nicely capture all of this. Through the Raiders Pass, we're able to finally measure the value of transactions and activity within our community, contributing to an increased average revenue per fan. And that is something that a lot of different teams and gaming creators are looking at creating. With that focus, we're also looking at expanding this into a blueprint, and for this to be shared across all 128 talents of ours, to build a combined ecosystem that across the board will be able to further monetize and build stronger activity within the community. If you look at some of the bigger brands today, such as Nike, you see that they're already involved in the co-creation process in terms of allowing their fans stake in being involved in terms of determining what kind of products they want to purchase, and also having that level of interaction and engagement. Web3 will further allow us to decentralize the participation, vision, and ownership. And this is very important for people to have a sense of affinity towards the product and company. In terms of revenue, as you can see, over the last few years, in fact, the last 2 years, we've got double revenue growth. We're looking at breaking 4.3 million next year. and also achieving operational profitability. The team is very well poised and experienced in terms of gaming. Combined, we've got more than 30 years of experience in various fronts on gaming, marketing, community content, and esports. And most importantly, we're also very updated on Web3 front. So where we're at right now is we have already closed the first half of our round earlier this year. 1.7 million has been committed by investment in the form of equity from some of the various venture partners, such as Tembusu Fund. We're now looking to complete the remaining 1.3 million USD by Q1 next year. For more information, do check out Deal Room, and also feel free to contact me. You can also check out our website, rsg.gg. Thank you so much for your time today.
Thank you for your presentation, Jiv. Perfect. So for our last company presentation today, I would like to invite Richard Fifita, CEO and Director at Wholesale Digital.
Thank you very much. I'll just share my screen. Sure.
Yes. Yeah, it's just coming up. Just needed it present in mode. Okay, that's all good. Thank you, Richard.
Okay, thank you very much. Okay, good afternoon, everyone. My name is Richard Fifita. I'm the CEO and co-founder of Vaya. Vaya is an inbound scheduling software platform that manages some of the most chaotic construction and real estate assets around the world. And as we all know, it's one of the most inefficient and archaic industries. But the problem that we specifically solve is the way that planning and scheduling is done at a site level on these types of projects. What you can see in the background here is a huge whiteboard. And in this particular example, what the site team were doing was they were calling the forklift operator to find out what time slots were available for the goods lift. And they would book in the goods lifts. And so that person was recording it. They'd print out a list at the end of the day and email it out to everybody. And that process is fine if things don't change. But on these big projects, things are constantly changing throughout the day. And if those changes aren't communicated in a timely manner to the supply chain, the incorrect information is sent, the wrong material is sent out to site, it comes in and you have 5 trucks turning up at the one gate, and there's a slowdown in material getting to the work front, and hence you have workers standing around doing nothing. So the movement of material and deliveries on these sites is a big problem in construction. And that's the problem that we set out to solve. And we essentially digitized that whiteboard. We created a live collaborative scheduling board where people can look in and see the availability of assets, such as cranes, delivery zones, forklifts, request the use of assets, and that would be approved or shuffled around by the approver on site, and everyone will always be notified. So our system allows everyone to collaborate and be across the plan, irrespective of where you are. And so we're being used by the biggest construction firms across Australia, New Zealand, and the UK. And over the last year, we've actually expanded from construction into facilities management as well. So to manage loading docks in shopping centres and offices. So our clientele now includes the likes of Westfield, GPT, Vicinity, and Dexus, in addition to all the big company logos that we work with in the construction sector. We've continued to expand our product roadmap as well. We didn't just build the collaborative scheduling board. We also now have driver tracking and route compliance like Uber Eats. We have digital dockets, driver inductions, CO2 emission tracking. And by widening our product set, we've been able to keep increasing our average order size. We've widened our market reach, and we've increased our competitive advantage. And, speaking of competitive advantage, there is really only a handful of competitors in this space. We're generally going up against a whiteboard or a spreadsheet, which doesn't provide the functionality that site teams need to manage this volume of inbound traffic. And so we've, in Australia, established ourselves as the leader in this area, and we've continued to make ground on these competitors in overseas markets as well. So there's a low amount of competition, but this is a huge market. There's a $5 billion addressable market. So for us to get to 100 million revenue, we only need 2% of that addressable market. And we're confident that we're in the leading position to gain a lot more than 2% of this addressable market. Now, the traction we've made to date in moving towards this is we've actually doubled our revenue over the last 2 years. We're on track to hit 2 million in revenue by the end of December. And we're expecting to continue around 70 to 100% year-on-year growth moving forward. The other really fascinating stat is that we've also been increasing our internal customer growth. So the general pattern we see is we get brought in on one project, then on the next year they put us onto 2 or 3 more projects, then they go on to 6 projects. And so with the various customers we're on different stages of that journey of growing the customer account. And we expect that that's going to really help us lock in the industry and really keep competitors out. So we're looking to continue this growth trajectory with a 2 mil cap raise. And the key use of those funds will be to allow us to continue this trajectory, keep growing at between 70 to 100% year-on-year growth, but we're looking to do so more efficiently so that we can get to break even by late 2024. And also to establish our presence on the US West Coast, where we're in the process of signing up our first customers. The team that will be delivering on this strategy, the 3 co-founders that commenced this come from various backgrounds. Myself, I was a construction manager with Lend-Lease previously. Stephen comes from a finance and accounting background from UPS and KPMG. And our CTO, Anil, was previously director of R&D at Citrix. We also have some excellent governance in place with advisors, and non-exec director John Ruthven, who's previously former MD of SAP and currently CEO of IR. For those of you who don't know who Aconex are, they were Australia's most successful construction technology provider. That was sold to Oracle for 1.6 billion. And the founders of that business, Lee Jasper and Rob Phil-Potter, investors and advisors to our business, which gives us great people to help support our growth and make sure that we can implement and do better than the current plans we have in place. So that's a bit of an overview of our business. Please feel free to have a look at some of the details in our deal room. Happy to answer some more questions. And there's a separate deal room outside of that if you'd like to go deeper with that. Thank you very much.
Amazing. Thank you for your presentation, Richard.
Thank you.
Perfect. So I would like to firstly thank all the companies for their presentation today. And now we will have a keynote presentation from Steve on innovation trends in 2023.
Thank you very much, Rhythm, and good presentation, Richard, and good shareholders that you've been able to attract into the company. So just I'm going to be talking about some of the innovation trends that we're actually seeing. And, you know, I presented this at the Capital Expo. So for those who weren't there, I think this is a really, like for me, when you think from a foundational perspective, there's 2 parts, right? Obviously, you've got the short-term, you know, things that are happening in the market, which is a lot of turmoil. It's obviously been quite down this year and so forth. But then you sort of look at the long-term trends that are taking place. And really, that's obviously where the investment opportunity lies for the majority of both in our own businesses, but also in our own personal investment capacity as well. I think one of the biggest things that I've been highlighting to everyone that I can is that, you know, you're seeing one of the biggest shifts of wealth taking place right now, in that effectively millennials are now coming into their sort of peak earning power, and likewise Gen Z are really starting to increase as far as their peak spending power. And the combination of the 2 is really important because it does tend to, I suppose, impact a lot of the companies and which we will look at investing into, a lot of the trends which we'll be focusing on, etc., going forward. The first part, you know, in highlighting this millennial wealth transfer. So not only is, not only are millennials coming to their sort of peak earning capacity, but also they're being transferred a lot of money from their sort of baby boomer parents as part of inheritance or even sort of early inheritance, etc. And that's becoming one of the most important things that's really driving sort of market trends. And you're seeing it today in the way in which sort of policies are being set out from both governments and also because that sort of, it dictates in a way in which it influences voting from one perspective, it influences capital markets from another perspective, and does impact what people are actually purchasing. So I obviously mentioned about ESG here, and it's interesting how that as an area has been politicized somewhat. But really from an investment perspective, it's now obviously been a government focus, it's institutional investor focused, and there's a lot of incredible companies that are coming out that are focused on this as an area and making sure that companies position and align themselves with this going forward. And you're even seeing a lot of the larger companies doing that, and it's sort of almost at the demand of their institutional investors. This one's been an interesting one for me to observe, you know, as someone that grew up in an era where it was all about ownership. This next generation is really focused about access and not ownership. And I love how it says here about the giving rise to the sharing economy. And we've seen that with the likes of some of our, you know, one of our clients that got acquired by Uber with Car Next Door. And, you know, to me, that was interesting one to see, but you're seeing it across a whole bunch of areas, whether it be bike sharing, whether it be, you know, services like Airbnb, etc. And, you know, I like this last one where it says 25 years from now, car sharing will be the norm and car ownership will be an anomaly. And you can see that, you know, you can see that actually starting to happen already. Wellness, obviously, as a trend, most of us wear, I just took mine off, but most of us wear some sort of device, whether it be an Apple Watch, whether it be a Fitbit, whether it be, you know, whatever type of device. My one's a Whoop strap. All of us are tracking our health in some way, shape, or form, and we've become a lot more conscious about it. And, you know, obviously we've got some stats here, you know, talking about how, you know, 83% of 12th graders disapprove of people 18 or older smoking, but it goes beyond that. Right, it goes beyond into the lifestyle, the healthy lifestyle factors that people are now looking to lead, well beyond what was sort of previously done sort of a decade or 2 decades ago, and that's important. The ESG component I mentioned, but I'll specifically mention about electric vehicles, just because, you know, and I personally think these stats are completely wrong, and it'll be actually a lot more, but effectively, if you go have a look at back at some of the old pictures, the transformation from horse and cart to car was a 16-year transformation. And what's really interesting is we're about to see that with EVs, right? EVs just crossed an important milestone, and I'll show that in one of my upcoming sort of slides. But effectively, this is going to be one of the fastest growing areas in the market, which will change a lot of different areas. Obviously, the buy now, pay later boom, we're all very well aware of. Whilst it went up very high and then sort of come crashing back to earth, it's a fundamental shift in the way in which people purchase, and will continue on for the next 5 to 10 years. For my generation, we never understood why there was an issue in actually having a credit card, right? So my mentor's lesson, and I always love to highlight this, is that basically, you know, he had the opportunity of investing into 2 companies, one which was heavy on salespeople, another one which was heavy on engineers. And what was really interesting is he chose to invest in the company that was heavy on engineers. And the reason for that is because effectively in building software, it creates unlimited capacity with a business, right? And effectively in dealing with humans, there's a limited capacity to how much you can actually do from a business perspective. And that psychology has proven sort of accurate in your way in which you're seeing this actual play out from a company's perspective, in that the companies which are engineering focused and led by software are able to scale a lot faster than the human-led companies, or a lot more efficiently from a capital perspective. One of the trends that I think really got brought out by ARK Invest that, you know, is talking about Wright's Law, where they noticed that for every doubling of production or manufacturing of airplanes, that there was an actual reduction in the cost required to actually do that. And this Wright's Law plays out across many different areas, whether it be software development or scaling of businesses, whether it be genomics, which I'll show in a second, whether it be the cost of solar panels, you know, generating renewable energy, etc. You know, it plays out across many of the innovation areas and becomes super important from an investment perspective, because even though markets are down, the fundamental trend is the revenue is going up and the cost to manufacture a lot of these areas, these technological innovative areas, is actually coming down. And what's important to understand, that the reason why it's going to come down more and more is this, right? Basically, adoption doesn't happen in a linear line. Adoption happens in an S-curve. And we saw that with mobile phones as an example, when the iPhone just destroyed BlackBerry in a few short years, right? You know, from 2006, everyone was walking around with their BlackBerry, and then sort of 2010, that had just been absolutely decimated, right? But we see this in so many different areas. And said, even though innovation has been most impacted in this last 12 months, the trend doesn't change. The trend is actually still growing at that same rate for a lot of these technologies. And some of these statements are some of the things that we're seeing from a business perspective, is that, you know, software and AI are actually eating the world. And they're basically, or the other part they'll start to eat is the actual workforce as well, because this software-driven capacity allows companies to operate at a much greater scale and able to create more efficiency amongst their team members and actually produce more, right? So it's going to be interesting to see this next 5 to 10 years in the potential for what a white collar redundancy could actually look like because of the way in which software and AI is actually playing a role. Renewable energy, as mentioned, wind and solar is now cheaper than fossil fuel generated electricity. Sequencing genomes has come down, this actually in 2020, come down to $338 from $1 billion 20 years ago. That is absolutely nuts how much that has actually come down. But this is happening in so many areas across scale when it comes to technology and it comes to innovation, right? And like consumer habits is really important because we used to go from, you know, basically just accepting what we were doing to moving to what we want on demand. You know, and Blockbuster and Netflix is a perfect example, and Uber, right? The fact you could see when your car was coming was such an important milestone for any consumer because I said we wanted something on demand. We wanted that satisfaction to know that our taxi was 5 minutes away from us, even though sometimes it's not quite accurate. Sometimes, most of the time. And so ultimately, all markets move towards solutions which save time, save money, and improve efficiency, right? That is the nature of markets globally and has been since day dot. You know, and so then you're looking at areas like AI and deep learning, where pretty much every company you can imagine is featured today, whether it be funds or, you know, sorry, whether it be the technology-driven companies, are either looking to utilize AI in some way, shape, or form, or are consuming it as part of their actual business. And it's becoming a lot cheaper for us to do that. So therefore, it's going to become a lot more prominent in a business case scenario. You know, the fact now when it comes to copyright, writing text as an example, or creating images can now actually be done by AI, which is absolutely nuts. You know, the sequencing of the genomes, right, the human code, you know, all the different things that can actually come from this from a technology perspective is absolutely fascinating. And you can see that there's billions and billions of dollars being invested into this area, and this will ultimately end up being a $1 trillion opportunity in the future. Same with the renewable energy infrastructure. You're dealing with a grid that's 100 years plus. It's very outdated. And now you're looking at the reimagining of that grid, whether it be through green hydrogen, whether it be through battery storage, whether it be through solar, energy power, etc. You know, you're looking at the way in which, you know, said there's a multi-trillion dollar opportunity in which infrastructure and the way in which energy is delivered, the way in which people consume energy, and the cost of energy is going to dramatically change over the next few years. And the way in which, you know, basically the way in which money is made from it will also transform as well. You know, 3D printing, as mentioned, one of the bigger growth areas across a range of different areas, whether it be from manufacturing cars to manufacturing pretty much anything. You know, the software, all those different elements that are involved, whether it be the material, the software, the technology, the AI utilized, scanning, the printing hardware. I say when you see that the Tesla car, as an example, is basically 3D printed, that is something absolutely astonishing. Crypto, that's well off that 1.7. I need to update that slide. It's well off that, but really the trend doesn't change. You know, even though it's well off its mark, said that's the nature of crypto. Ultimately, the adoption continues, and we see, you know, effectively one of the hardest things to understand about crypto is you need to look at this from a logarithmic perspective, you know, not a linear perspective. And when you look at it from logarithm, you see that it's a very and it's really only sitting at where the internet was back in sort of 1999, you know, 1999, 2000. So there's a very, very long way to go for crypto, even with all the stuff that's come out from FTX, BlockFi, and all the other challenges gone before it. You know, it said that is innovation. Part of what it does is it does blow up in the early days, right? And we saw that with the tech wreck, right? But then some of the larger players end up coming out and dominating and basically creating the next wave of opportunity, which is now being defined as Web3. And then Metcalfe's law, and this is I think one of the most powerful things. If you factor in Wright's law, then you factor in adoption curves, and then you factor in Metcalfe's law, you've effectively got this beautiful power of dealing with all the different social media platforms and all the different messaging services that basically give voice to people, to millions of people, or something like TikTok, where I said one video can go out to millions of people from an unknown person within seconds, right? It changes the dynamics of absolutely everything. And this is why this will happen faster and faster. What previously took 10 years will suddenly take 2 to 3, right? Because of all the platforms and the network effects associated with it. We'll see new ways in which communities will have the opportunity to actually create value. You know, instead of being centralized with the corporation, you can see how it's been basically now moving towards the individual, whether it be the opportunity to participate in communities, to create communities, monetize communities, or even just their own protection of data, or even monetize their own personal data, etc. New business models are going to be endlessly created as part of this, like we've seen with Web 2, where the whole, I suppose, subscription and access model really changed a lot of different things. I mentioned about the community value creation part. There'll be lots of different ways. You know, we're seeing more DAO. Recently saw Apollo come out with a DAO. And likewise, I've seen that in the US. Obviously, we've seen the rise into some parts, and it's amazing. Even when crypto was being smashed, I remember at our July event, it was still one of the most popular sessions, right? I said the tokenization of real assets is obviously coming on stronger and stronger, and likewise, the tokenization of all different types of assets, or even art or so forth, will also continue to grow. And then there's the metaverse, the way in which we experience different things. So over the next 5 to 10 years, that will also play another role. And with that comes basically the rising tide lifts all boats, right? So whether it be all the opportunities get created around the adoption of these different technologies, you've got a young, hungry, ambitious founder and obviously investors looking to invest into what is that next wave of opportunity. And there's all sorts of business models off the fringe of that will be generating revenue from it, whether it be the service providers, the hardware providers, the software, logistics, services, the raw materials, the infrastructure, all that's required to build this next layer of opportunity when it comes to innovation. And that's what's exciting about the next sort of 5 to 10 years, regardless of what we've experienced this year. So, and then with that comes, different ways to monetize it. But with that, there'll become new business models. And I said, this last period has been dominated by marketplaces, platforms, and obviously social media and subscription-based services, etc., and the aggregation of people into different platforms. So it'll be interesting to see how these next revenue models get created as part of this Web3 movement, but also in the areas such as electricity, where I said it's becoming cheaper and cheaper. How will that be monetized going forward for the investment that's required as part of it? So this is such an exciting time to be in the innovation space. I really appreciate everyone watching our stream today. I said congratulations to all the companies that have participated today. Over the next couple of weeks, we're actually going to be sending out emails that are going to be promoting all the companies that participated today. So what I love about working with founders is they work day and night to build their businesses. This is a hard, this is one of the hardest things to do. You have to admire the spirit that sits behind a founder that's willing to, work 24/7 to build their ambitions, to build their dreams, and to break new territory in the different areas that they are. I said people often forget that. I said there's an enormous amount of effort that's required to actually build and grow a business. And I said we're always very proud of the companies that we get to feature as part of Wholesale Investor. So on that note, thank you everyone for joining our Emergence Headstart Online Investor Showcase. Really appreciate you joining us. And most importantly, I look forward to seeing you actually live and in person on March 23 and 24 at Emergence in Sydney. I said we're going to have anywhere between 750 to 1,000 attendees at the event. We've got incredible setup for it. We've got ASX listed companies, fund managers, Web3. We've got private companies, deep tech, etc., renewable energy tech or climate tech, however you want to position it. So there's a lot of exciting stuff coming up at Emergence. We can't wait to see you there. Thank you very much, everyone, for joining. That is the end of today's session.